Good afternoon, everybody. I'm Stacy Scott, and I'm in charge of marketing and client relations here at Wickham Financial and Insurance Services. And I'm here with Graham for our weekly wrap-up. And Graham, what can you tell us about what's been going on in the market this past week?
We had really a continuation of the last couple of weeks, and we had a really strong market. Seemed like all sectors rallied in this market for the most part. We really saw growth outperform value. Remember, there's been that struggle by about 200 basis points since March. And we saw U.S. equities, again, just continue that strong rally, even though we had some worrisome inflation numbers that were out there and a negative gross domestic product print. We saw from the indices standpoint, the S&P, the NASDAQ, the Dow, up anywhere from 4 to 5%. We basically, as I mentioned just a moment ago, all sectors of the S&P really rallying, where we saw oil up about 3 and change. We saw utilities up 6. We saw technology up 5%, industrials, consumer, discretionary. Everything was really up last week, even though we saw 3 months now of straight monthly declines in consumer confidence. So again, we're seeing consumer confidence fall, but the markets rally. So it's kind of interesting to see what is so fearful for the consumer that Wall Street feels much more comfortable about. Internationally, kind of wrap this up, we saw in the ECB internationally, we saw orders really surge 1.9% for June. Again, we did see positive economic numbers for the Euro Central community. But we are seeing continued challenges for Germany, as well as high inflation prints for Australia.
Okay. Well, Graham, I understand that the path of the Fed is now going to be data dependent. Can you tell us exactly what that means?
Yeah, the way to think about it, they just basically turned an autopilot switch off, right? So they're not going to be in an autopilot mode just to raise rates over and over again without being mindful and data dependent to look at that data and say, okay, do we need to pull back? Do we need to be more hawkish, less hawkish in terms of their rate path?
Okay. All right. Well, with these really strong markets, is this something that you think that can continue? And what is the outlook down the road?
Well, I think it depends, right? Earnings came in, and we're still in earnings season, but we just had some of the largest companies report earnings, the largest technology companies report earnings, really setting a more positive path in terms of earnings. So as long as we continue to see strong earnings, maybe we see a CPI print that's going to be coming out here, showing a rollover, a turning in inflation, meaning not moving up as quick. Maybe it's stabilizing, possibly coming down. I think that would just put more momentum in this market to continue to rally to the end of the year. That doesn't mean we're not going to have fits and starts. You always have to plan for that. I don't know if it's a straight path, so I don't want to paint that picture, but I wouldn't be surprised that the market continues to perform positively as we move back into earnings a quarter from now, so on and so forth, as we move through the year.
Okay. Well, thanks so much for that information.
You got it.
And thanks to you all for joining us today and every week for our weekly wrap up. We'll look forward to seeing you guys next week. Thanks so much and have a great week.
Take care.